Welcome. I'm Catherine Magana here with Steve Wolf and Rachel Ivanovich, where we're here to provide you insights about the markets, financial planning, and tax planning. And it's been quite the week. Today is March 13th, 2025. And since last week until now, we kind of look at where we're at with the markets. And as of yesterday's close, which yesterday would have been March 12th, the Dow Jones in that week was down about 4%, but year to date, the Dow Jones is down about almost 3 or 2.8%, not including today. So today the market's fluctuating a little bit, but obviously every day is a new day. We actually have seen a lot of movement in the Russell 2000, which is more small cap stocks. And over the last week, that's down a little over 3%. However, year to date, it's down about 9.13%. And that's the area that has, that's fluctuated a lot over the last several months. So there's definitely a lot of market movement. There's conversations and concerns about tariffs. Is there a government shutdown? The CPI index,
Consumer Price Index.
Consumer Price Index just came out. And for February, it was down a little bit. So it looks like it came in at 2.8%, which is below some of the expectations originally, which isn't a bad thing. I think we're, at this point, it's not a big move, but obviously the market's reacting to that.
Well, that contributes to inflation numbers not being as high as people think.
Yeah. And then the indications for kind of the Fed and if there's going to be any type of rate pause or cuts. It looks like there's a 99% chance that there's going to be a pause when they meet next. So I don't think we expect rates to change in the near term, but there's still a lot of markets have been moving a lot, and it's been a little volatile. And it's interesting as you kind of look back the history of the market corrections. The S&P 500 from 1942 to 2024. The S&P was down 5% or more about 3 times a year, and the average length was about 39 days. In that same time period, the markets were down, or the S&P 500 was down 10% or more, and that happened every 16 months. So there are times, and even within a year, that the markets do fluctuate. We actually can see in a year, we see the markets can move 5, 10, 15, 20, even 30% or more. So we're not jumping in and out of the market, but we are aware and understand there's some market volatility going on right now.
Yeah, I think the big fears out there right now are trade, growth, and the deficit. Obviously, trade is been the big headline story because of tariffs, and that's still, again, I've said my opinion here before is that I don't like tariffs. I think it does cause inflation, and right now people are thinking about stagflation. If the economy is slowing down, if it is, and the numbers really don't show that, but if the economy is slowing down and we've got inflation going on, that's something called stagflation, which happened in the 1970s. Of course, I also remember long gas lines when you were trying to get gas for your car. So this is not the same type of thing that happened back in the 1970s. But, when people get scared, they look at everything. So that's part of it. The deficit spending is also another big part, and you guys have heard me talk about this before. I don't think it's a good idea to spend more than you have. And our government has done a really, really, really good job of spending way, way, way too much. So, it's spending more than we really can afford. So that's part of it, and growth. Now, interestingly, although the earnings reports, really are good, people don't feel that way. But in the second quarter, this is according to Zacks, and they were saying in the second quarter, S&P earnings, with roughly 98% of the earnings already in, so almost all of them, is on pace to show a 15% increase. Mm-hmm. That's pretty good. With first quarter's forecast at 6.1% up, and second quarter up 10.5%. Third quarter, they're forecasting up 9 and something percent. Now, I think those numbers are going to come down, okay? But the numbers that have already happened this past quarter were good. And it looks like this quarter is good. So the question is whether that will continue or not. I think tariffs will have an effect of slowing things down. Mm-hmm. We'll see. We'll see how long those tariffs will last. But those are the big things: trade, growth, and deficit spending.
I'm just thinking about taxes, Steve.
I wonder why. You've only got about a month to go.
Oh man, yeah, and I've had a lot of clients calling my office asking me if what's going to happen if the government shuts down. Will I still have to pay my taxes? And the answer is, of course, yes.
There is no pause on paying your taxes.
But honestly, in the last 50 years, 20 times in the past 50 years, there's been a government shutdown. And the most recent one lasted 34 days. And I don't know if anyone remembers, but I remember it acutely because we didn't have our tax forms to start tax season. But some of the things that could affect you are you definitely want to file electronically because, especially if you're going to get a refund. And if you're making a payment, do not send a check in. Because if nobody's at their desk, that check is just going to sit on someone's desk and get covered in other papers. So there are ways to pay online. There's IRS direct pay that you can use, and if you whatever state you live in, most of the states also have payment options online. So
don't you think we should get a credit for those days that the government says that they're closed?
I agree, Steve. Yes.
Like, wait a minute.
And if you really want to talk to an IRS agent during a shutdown, you can't. So
you cannot.
You cannot because typically those phone lines are not staffed. Unfortunately, but even when the government is working, you can't get anyone on the IRS line. So there are ways, especially recently, that you can open up an online account with the IRS, and you can access your records, you can look at your payments, you can pull wage and income transcripts. There's all sorts of things you can do.
So it's interesting. Another kind of topic that just came up recently is the 2026 cost of living for Social Security. And Social Security has been another hot topic we've been hearing a lot about. But it looks
we need to talk a little bit about that.
Before we get into that, it looks like the cost of living adjustment for Social Security is now they're looking at 2.2%. But we do have between now and October when they come out with those with the change. But it has come down a little bit from the original projection.
Right. So lately, and it seems like the last couple of weeks, I've heard people say that the Trump administration is going to cut off Social Security. So I am one of those people who's a recipient of Social Security, so I wanted to see if that was true or not. I cannot find anything that says that.
I've done a lot of searching as well because I've had several clients call me wondering and worrying about that.
Right.
So.
And I think that would be the absolute last thing that will be cut, if it ever does get cut, and I don't think it will.
In fact, they are actually giving out more Social Security. We had a podcast recently. We were talking about the Social Security Fairness Act, and several people who heard our podcast called the Social Security Administration because they said this applies to me, and they've already received their checks. Wow. So I thought that was fantastic. So.
Right. Well, look, if we do nothing about Social Security, if we do absolutely nothing, in about 6 or 7 years, when the Social Security Trust Fund is scheduled to run out of money, Social Security will be cut by 25%, but not by something that the government, or I should say the Trump administration, because that's really what we're talking about, has done. It's because of all the past stealing that has been done out of the Social Security Trust Fund. So at some point, if that runs out of money, there's not enough money in which to pay what you had. Because remember, payments are made by other people. I've called this a Ponzi scheme, and I really think it is kind of a Ponzi scheme because other people are paying for you. It's not your money that you're getting back.
Well, isn't there talks potentially of changing the wage base?
In the tax community, we've been talking about what does it look like if they lift the cap on the Social Security wage base. So if you are a wage earner, so for instance, you have a W-2 and or you're self-employed, you pay into the Social Security Fund. And from your earnings, 6.2% is withheld to cover this, and your employer kicks in the other 6.2% for Social Security. Medicare,
so 12.4% of your salary is going into...
No, 6.2%. Because the employer pays the other half.
So a total of 12.4
okay, fair. All right,
is
fair.
going into...
But you're not paying a person.
That's fair.
Yes.
That's fair. Medicare, so there's a cap on that, so Social Security wage base. And it currently for 2024, I believe it was $168,600. And that every year has gone up incrementally. Medicare, on the other hand, you pay into Medicare and doesn't matter. There's no cap on it. And so it's 2.9% into Medicare. 1.45 is withheld from your wages and your employer pays the other 1.45. If you're self-employed, you pay both halves. So in the tax community, there has been talk. What if they just got rid of the Social Security wage base?
Well, certainly that would help. but it's not going to eliminate the deficit. There just aren't enough people who make that kind of money. So the vast majority of the money is coming from people who are already paying it.
But we also saw in the past the ages have changed over time, and there's
Correct.
So things do happen, and this is definitely something that has, we've been aware of for many years, and there is some action that does need to be taken. It's just when and what does that look like? But
Well, we've talked about this a million times in the past, but look, in 1935, 65 years old was when you died.
Yeah.
Okay.
Yeah.
Today it's more like 80.
or 90 or 100. People are living longer.
But the
I know,
average is
you're right,
somewhere in the
yeah,
around the 80, 81, I don't know, somewhere in that range. So that has gone up, but you still get Social Security at age 65 or full at 67. It really hasn't kept up with that. So it really was a true old age pension back in 1935.
And then now there's cost of living adjustments with those pensions too. So that's something that.
So where does the money come from?
Yeah.
All right, and that is the problem. So even if you don't have the cap, and I'm in favor of that, make money, pay it, whatever. What I'd like to see, truthfully, is for younger people who haven't been in this for 30 or 40 years, but maybe the people who are 20 or 30 years old, maybe they take half of that and put it into a 401k type of a program, and maybe keep the other half into what is now called Social Security, so that by the time they are our ages, and when I say our ages, my age, which is 40, no, my age, that they will have enough money just based on their own money that they put away, because you don't really, if you look at the percentage that you actually make on Social Security, it's not a lot.
Yeah. I think if they did something like we were talking about, but it's required, because if you don't, because if people could opt in or say they don't want to do it, then at some point you're going to have a bunch of people that want to retire that aren't going to have money because they didn't save.
No, I'm saying it should be required.
Like a mandatory.
Absolutely, just like it is right now. And maybe we should have a little less leeway on how people can get the money before they're retired. Okay, I think there are ways to do it. And I've heard other people say, well, just tax people more. Well, first of all, you're being taxed a lot right now. And I looked this up the other day on ChatGPT, and 10% of the taxpayers are paying almost 80% of the amount of taxes that go in there. So, it's not a system that is even. It is very progressive, extremely progressive.
It's extremely progressive.
And if you keep doing that, sooner or later, businesses who are paying a lot of that will say, I'm not going to do this anymore, which is exactly what happened. I've talked to, interestingly, my wife gets her nails done, and she gets her nails done from someone who's Vietnamese, which I guess is pretty common. And I started talking to them, and they said they came over here, and because of what was going on back in the communist, Vietnam. And I said, well, did your family work? And they said that their father, this one particular one said, my father had a business. But they kept increasing their taxes. And finally the father said, I give up. I'm done. I'm not going to have my business anymore. So at some point, I know we're not there, and people are going to say, oh, we're not there yet. We're not. But at some point, it's such a disincentive for people. They just say, why should I do that? So you don't want to kill the goose that lays the golden egg. All right, but there are other ways to do it, and we're talking about some of those ways. Yeah.
And then looking at when to take Social Security and Social Security strategies, that really ties in.
Had a lot of those conversations this week with clients.
So that's something that, we look at the financial plan, we look at, there's a lot of different variables we look at, but yes, that's what we're here for, is to have those conversations.
So let's go back a second. Those people who are worried about their Social Security, I'm not worried at all, and I get Social Security right now. I'm getting it. Okay, I'm not worried that I'm not going to get it. I worry a little bit that, the trust fund is going to run out, but I have a feeling that when that happens or before that happens, the government will take money from somewhere else, and hopefully not just print money, because that's the other problem we have, that the current administration is trying to figure out how to cut expenses, and it's painful, and people don't like it, and I get that, but if you don't do it, we're on an unsustainable path that at some point we go broke. And I don't think we want to do that either, because then there's not enough money for anybody. So it's a tough problem. It really is. And I'm glad I'm not the one that has to do it. So.
Well, on a positive note, hopefully next week when we're on this call, that things will shift a little bit and we'll have some more clarity on where we're at.
Honestly, I don't expect anything to change in the very near future. Yeah. I think with the tariff talk that's out there, that's going to continue to happen. I mean, you've
I
got.
saw the tariffs on European wine, 200%. I was like, oh my goodness, who's going to want to drink European wine now?
Good thing
enough to get you to stop drinking.
Right?
we have a lot of good wineries in California.
That is true.
Yeah, and now there's a tariff on steel
Yes.
and aluminum, and think about that. The cans for canned food, that's got to go up. Cars, that's going to affect cars. I mean, there's all sorts of things that bottlers and stuff like that. Well, I say bottlers. I think what they're going to do is they're going to probably switch from aluminum to glass or plastic, so that they don't have to worry about that the tariff. But the tariff's definitely going to have an effect.
I know it's not a short term. This is going to happen. I know.
I hope that it's short
road.
term,
Yeah.
because part of what I had heard was that they're trying to get some political answers, like to things like fentanyl. And I did hear this morning on radio that the fentanyl trade, if you will, has gone down by about 40% over the last couple of months. So hopefully, that will go down to almost zero. And we won't have so many deaths. Hundreds of thousands as I understand it, hundreds of thousands of people have died from fentanyl poisoning. So maybe, hopefully that's what's going to happen. I hope is never a good strategy, but I do hope that at some point this doesn't get out of hand, because that's what I don't like about tariffs. One country says, well, I'm going to raise prices on you.
Yeah.
The other says, well, if you're doing it on me, I'm going to do it on you, blah, blah, blah. And it just keeps going until, we have real problems. And that is really the reason why the stock market is going down. That and all these other things we're talking about. The Russia-Ukraine thing, whether that's going to get stopped or not. Yeah. The Hamas thing with Israel, whether that's going to get stopped. Iran, I mean, there's all sorts of things. People are still worried that China's going to invade Taiwan, and I wouldn't put it past them. And then you've got like Taiwan Semiconductor, which is sitting there, and they are a major I seem to be repeating my words today, but they are a major force in the computer chip business. So there's a lot of things that can go wrong, and that is why the stock market is down, because they're looking at what might happen over the next 6 to 12 months. Now, if tariffs end, I would bet you there will be a snapback in the stock market, and we never know when that's going to happen. So make sure you stay diversified, or if you have some cash, just be cautious. Buy really high quality companies. Don't be necessarily in a hurry, but there's a lot of things you can do, and don't worry.
Yeah, and don't try and time it, because the markets move very quickly, and this isn't the time you want to do that.
Right. After all the things I said don't worry. But the reason I say that is because in history, in our past history, the markets have always gone down and then come back higher than they were before. Can you guarantee that? Of course not. But again, 150 years of it happening, I feel pretty good that it probably will. So don't panic. Hang in there. It's hard to do, especially when you're afraid. Your emotions get the best of you, but you got to put those to the side and just say, do I have a company that's good? Are earnings getting better? And that's the other thing too. I talked to a couple people and said, you realize that a lot of these companies' earnings are growing, even though the price is coming down. Okay, well, when that happens, you don't necessarily want to throw the baby out with the bathwater.
And we've had conversations about how are you invested? Do you have enough money and cash flow? I mean, that's why we have a plan. We have a good investment portfolio for each client designed specifically for them. And we, this is the time if you want to go over it or make sure to reiterate that you're at a good place, or if we have to make any changes. But, we're not jumping in and out of these markets. Like I said, if you can miss the market and lose if you do that.
Well, this is a good time to talk about cash flow.
Yeah.
Okay, one of the great things about getting dividends is, as long as the company's making money enough to pay your dividend, that doesn't go down.
Yeah. And dividends
wait, let me finish. It will go down with companies that aren't making enough money. Yeah. But most of the companies that are high quality companies continue to raise those dividends year after year after year. Now, you still have to be cognizant that there are times when business is bad and they could cut the dividend, but the vast majority of great companies continue to raise that dividend. So that's number one. There's also other things out there. There's real estate investment trusts that pay a pretty good dividend. There's preferred stocks that pay a dividend. There's bonds that pay interest. So there's lots of different things you can do. Obviously, what's right for you is you got to talk to your consultant and call us if you need to, and that'd be great. We'd love to talk to you, but cash flow is really important, especially as you get older, okay, where your years are limited and you can't just say, well, 20 years from now my account's going to go up.
And then with that, if you have Social Security or do you have other rental income, I mean, you have to.
I mean, the Social Security that we're worried
yes,
is
the
going to be there?
that it will still be there. I don't think it's going to be completely gone. But okay.
So there's a lot of things going on. Tax deadline is April 15th, so you got
Still is.
Right around
Still
the
Well,
is.
you know, sometimes because it's on a weekend.
That is true.
Is it on a-
Actually, this is one of the first years in, I think, the past 5 years that we've had an April 15th deadline. My team is doesn't even know what to do.
Right.
I have two employees that have never done an April 15th deadline, and they're panicking a little bit. They're like, how are we going to do all this? I'm like, don't worry, I got this.
It'll get done.
Yes. So the corporate deadline is March 17th. So if you have a corporation, make sure you talk to your tax advisor.
Well, that's
and
coming up in a couple of
couple
days.
of days, yep. And so I can't believe I'm got my eyes open. Need some toothpicks over here.
There's a reason why we didn't become accountants, right, Catherine?
Exactly.
All right. Well, thank you, everybody, for listening. We'll see you again next week. Until then, have a great week. Take care.
Thank you.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.